Sometimes the biggest revolutions don't start with noise. They start quietly. No hype, no fireworks. Just a slow shift that changes everything when nobody's paying attention. That's exactly what's happening right now with real-world assets, RWA. Everyone's watching Bitcoin, Ethereum, or the latest meme coin. But the real transformation in finance is happening somewhere quieter, inside spreadsheets, bond markets, and balance sheets. It's not sexy, it's not trending on Twitter, but it's the foundation of the next financial system. RWA is simple to explain but huge in impact. It means taking something that exists in the real world, like a bond, a building, or a share, and representing it digitally on a blockchain. A token that stands for something tangible, not just code, but value that already exists. And this idea, turning the physical into digital, is what's quietly turning crypto from speculation into infrastructure. For years, blockchain promised to revolutionize finance. But for most people, it looked like gambling, not progress. That's because we were still trading imaginary things, tokens about tokens, coins about concepts. It was too abstract. But RWA changes that. It makes blockchain useful. It gives digital finance a real-world anchor. When you tokenize a bond, a property, or a loan, you're not creating something new. You're improving how it's owned, moved, and verified. It's not about new money. It's about making existing money smarter. Let's make it real. Imagine a bond, a simple government bond that pays 5% a year. Today, if you want to buy it, you go through a bank, a broker, a custodian, maybe even a fund. Every layer takes time, fees, and trust. Now imagine that bond is tokenized, represented as a digital token on a blockchain. You can own it directly, instantly transfer it, trade it globally, and still earn the same yield. No middlemen, no paperwork. Same security, but 10 times faster. That's not science fiction anymore. It's already happening. Franklin Templeton, one of the world's largest asset managers, launched a tokenized money market fund on-chain. BlackRock, yes, that BlackRock, just created its first tokenized fund on Ethereum. They're not experimenting for fun. They're testing the next standard. Because the traditional financial system is built on friction. Every transfer, every trade, every custody event is a fee. That system made sense in the 1900s. But now, with instant global networks, it's like using a fax machine in the age of the internet. RWA breaks that model. It says, what if finance moved at the speed of information? What if ownership could be updated, verified, and settled in seconds, not days? That's the silent promise of tokenization. It's not about speculation. It's about efficiency. And when efficiency improves, everything else follows: liquidity, transparency, accessibility. For years, blockchain has been fighting for relevance. People said, what's the real use case? Well, here it is. It's not about replacing the dollar. It's about upgrading the system that moves it. Think of it like the early internet. In the 90s, people laughed at websites. They said, why would a business need one? Now you can't survive without it. That's what tokenization is to finance. In 10 years, banks won't ask if they should use blockchain. They'll ask which one they already depend on. But here's the irony. RWA is both the most revolutionary and the most invisible trend in crypto, because it doesn't look like a revolution. It looks like paperwork disappearing. Behind the scenes, banks are testing tokenized treasuries. Corporations are experimenting with on-chain settlements. Governments are exploring digital bond issuance. It's not flashy, it's functional. And that's exactly why it will last. Hype fades, infrastructure stays. Now, let's talk about numbers. The total value of tokenized real-world assets today is around $6 to $8 billion. Tiny, right? But global bond markets are over 130 trillion. Even if just 1% of that moves on-chain, that's over $1 trillion of real, regulated money entering the blockchain world. And that's when everything changes. Because when real yield enters crypto, speculation transforms into adoption. When investors can hold a digital bond next to a digital token in the same wallet, the gap between Wall Street and Web3 disappears. That's not a dream. It's a pipeline being built right now. But there's more. RWA doesn't just bring new assets on-chain. It forces crypto to mature. It demands compliance, audits, regulation, accountability. You can't tokenize a real asset without verifying it. You can't bring a bond on-chain without legal clarity. That's why this movement is happening quietly, because it's professional. It's not about hype, it's about structure. And ironically, that's exactly what crypto needed all along. Let's connect the dots. Every big narrative in crypto has been about energy. DeFi was freedom. NFTs were creativity. AI was innovation. But RWA, that's stability. It's the bridge narrative, the one that connects the wild to the real. DeFi built the tools. RWA gives them purpose. Stablecoins were the first step. They showed we could represent dollars digitally. Now, tokenized bonds and funds are the next evolution. They show we can represent value itself digitally. It's the same technology, just a new level of seriousness. And here's the part most people miss. RWA isn't just about moving money faster. It's about changing who gets to move it. Because once assets are tokenized, anyone with a wallet can access them. No minimum accounts. No local restrictions. Finance becomes software. And software doesn't care who you are, it just runs. That's why this isn't just a financial upgrade. It's a social one. Imagine being able to buy a fraction of a US Treasury bond from your phone in Nigeria, Romania, or Brazil, legally, instantly, and securely. That's the kind of inclusion the old system could never offer. That's the real revolution. But of course, it won't be easy. Every revolution meets resistance. Traditional institutions don't like losing control. Regulators move slow. And there's still massive risk in connecting the digital with the physical. If a token represents a building, what happens if the building burns down? If a bond defaults, who enforces it on-chain? These are hard questions, but they're being answered. Smart contract insurance, on-chain oracles, legal digital twins, the frameworks are coming, bit by bit. And once they're ready, there's no going back. Because once you make money programmable, you can't unlearn that. The most powerful thing about RWA is that it changes how value feels. For decades, ownership was abstract. Paper, signatures, PDFs. Now it's instant, visible, fluid. You can see your bond, trade your property share, earn yield, all in one digital wallet. It's ownership redefined. And when that becomes normal, the entire financial stack will rebuild itself around it. So if you're watching this and thinking, why should I care? It's just another crypto buzzword. You're missing the point. This isn't about chasing returns. It's about witnessing infrastructure shift in real time. Bitcoin challenged the idea of money. Ethereum challenged the idea of trust. RWA is challenging the idea of ownership. And that's a bigger deal than any token pump. Look closely and you'll notice something. The biggest names in finance aren't mocking blockchain anymore. They're building on it. Not to speculate, but to survive. Because when technology makes something cheaper, faster, and safer, it's not a question of if it wins, it's a question of when. And the when is already here. So while everyone's arguing about the next meme coin or the next halving, the real story is unfolding quietly in the background. Spreadsheets are turning into smart contracts. Balance sheets are turning into blockchains. And money, real money, is learning how to move freely for the first time. That's the quiet revolution. That's real-world assets. And when people finally notice it, it won't feel new. It'll feel inevitable.